With many banks currently offering over a 5% yield, you may be tempted to start putting more money into these banks to capture these yields without a major downside risk like the stock market in 2022. But even with your money in the bank, you are still losing money. And I will prove it in this video to give you some real life examples of how I lost money keeping my money in the bank as well. As usual, none of this is financial advice. I'm not a financial advisor.
Knowledge.
So you may ask, John, how do I lose money if I get 5% per year on my cash right now? If I had 10 grand in the bank, I'd make $500 doing nothing with a 5% yield. And you can get about 5% anywhere right now. I'm getting that through Robinhood Gold right now. This is where I park the cash I need. It's not sponsored, but I do have an affiliate link in the description if you want to utilize it. They also have good margin rates, and I personally just like Robinhood. But even with 5%, we need to look at how much are we beating inflation by? How quickly is our money being eroded away by the government just printing more money into the money supply? Going off numbers from usinflationcalculator.com, we can see how inflation has been over the past 3 years. 2023 was a 3.4%, we had a 6.5% in 2022, and a 7% in 2021. And we know no banks were offering real yields on their cash until very recently. So inherently, keeping money in the bank, you lost money because in 2021, your money lost 7% of its value. 2022, you lost 6.5%. And in 2023, you lost 3.4%. And many question the legitimacy of these numbers, and many feel it's actually higher than reported. So you might have actually lost more money than these numbers imply. And we know no bank in 2021 was offering a 7% yield, so you definitely lost money during that time period. And it's not often savings rates are what we have been seeing over the past 2 years. Before 2021, we often saw saving rates of a measly 0.1%, easily losing you money to inflation. It's not even a percent, dude. These were 0.1%. But things have changed, and now we can find a 5% APY pretty easily. But the question is, how long does this last? I don't know. If it was 5% for the rest of our lives, this might be a good deal, but that is most likely not the case. So when you needlessly hold on to cash, you are a victim to two things: inflation and opportunity cost. I guess also a third if you count your bank collapsing like in 2023, but let's ignore that risk for now, even though that is honestly a huge legitimate risk. So let's run some quick numbers and then I can show you my point. If I had $10,000 laying around in a bank last year, and the interest rates were starting to go up, and I got an average on the year of a 4.5%. I beat inflation by about 1% since inflation was 3.4% last year, and my savings rate was 4.5%. So let's say with this cash, I magically beat inflation for 30 years, utilizing interest rates, which hasn't happened historically, as we have seen, but let's just pretend. So if I got a 4.5 interest rate, and let's say inflation was around 3%, 3.4%, I'd make a percent gain per year on my money. That'd be a percent yearly I beat inflation. After 30 years, how much would my $10,000 turn into? I'd have $13,000, $496.90, and I earned $3,496.90 in interest. So I only made $3,000, $3,500 in 30 years by beating inflation by 1%. Although I made money, there's a huge opportunity cost for keeping my cash in here, just keeping it in savings when I don't need this cash. That's the difference. If I don't need this, if I don't need to touch it, it's very different. Let's say with this 10 grand, I bought an S&P 500 fund instead and got a 7% inflation adjusted return over 30 years. What would it be? I would have turned this into $81,000. I would have earned over $71,000 on my cash. That's a huge difference than a measly $3,500 in an unrealistic savings scenario on $10,000 I don't need at this moment. When you hold on to cash, you lose to inflation, and you lose the opportunity cost of multiplying your money literally over 7 times, guys. That is a huge cost to hold cash. Do you currently hold a lot of cash? Make sure to comment down below. Now you may say, John, I was going to hold on to this $10,000 for something else. That's fair. That's the question. How much cash do you need to hold? That is only a question you can answer. You can use something like the 3 to 6 month rule, have 3 to 6 months worth of expenses saved. Maybe if you have some big purchases you want, you should be saving up for that, right? You're not going to put the $10,000 in the stock market when you want to buy something big. But do not needlessly save without intention. The opportunity cost is too big. If you're needlessly saving, not having your money parked somewhere, you're just losing to inflation for literally no reason. I'm not saying spend needlessly, but with that cash, save it with intention or invest with intention. What I'm just trying to say is be intentional with your money. Invest in something that grows your money, or you lose to inflation. That's this game. Guys, I'm only 29, and I can say back in my day, there used to be a dollar menu. That's how much the value of the dollar has changed. I'm going to be a crotchety old man saying, back in my day, we should get a McDonald's burger for $1. That's long gone. Don't needlessly save money. I'm begging you to be intentional with your savings and where you put your money. Where are you going to put this so it doesn't lose value? You spent time working on these things, so make sure it's fruitful. You can do things like the S&P 500. You can do a dividend portfolio like SCHD. You can do Bitcoin if you want to multiply your money. You can do real estate. There's a million things you can do. You can invest in watches. If you're really into a trading card game, you can buy cards that grow in value if you really know the card game that well. We don't have to be so black and white about investing, but just simply holding on to cash without intention has huge costs. Now, I'll give you an example about myself. When I was going through my master's degree in 2019, I was a saving machine because I was paying out of pocket. I didn't want any debt. So it would make sense for me to be saving my money because I'd always have a huge bill at the end of the semester to pay for my master's. But when I graduated in 2019, I had no debt, and I found out I actually had a ton of money. Guys, I had like almost 30 grand extra. That's how much I was working and saving and paying off my school. And thank you, Mom and Dad, for letting me stay at home. I was really proud of myself, and I worked quite hard throughout college to ensure I'd have no debt. So what did I do with this 30 grand once I graduated? Guess what? Nothing. I did nothing with that money for years, losing to inflation. Luckily, I finally got investing after COVID, like everyone, but I didn't really apply anything till 2022. So that was a long time of my money just sitting around doing nothing. So let's run an opportunity cost scenario. Let's say with this 30 grand, I put it into the stock market after my graduation in 2019. Since after that year, I decided to go do volunteer work overseas, and I wouldn't need money. I didn't need money for that time period. And let's see what would have happened if I never invested that money. So let's compare. So I have Portfolio Visualizer. Let's go to 2019 when I graduated, and my initial investment was $30,000. Okay, we're just going to do SPY, just a normal S&P 500 fund, and it's just going to be my portfolio, nothing fancy. How much would my $30,000 turn into within this 5-year period? My $30,000 would have turned into $62,000, almost $63,000. That's with me just investing in 5 years. I would have doubled this money within 5 years. Now let's run the other opportunity cost. Let's say I had $30,000, and let's say I magically made a percent on my money with the savings rates, which is still unrealistic. But let's say for 5 years I had an interest rate of 1%. I made $1,500. I could have doubled my money with money I didn't need, or I could have made $1,500. That's a lot of opportunity cost lost. And then let's say I didn't actually do anything. Let's say I just left it out and I lost it to inflation. Let's say it was sitting in the bank. A long time with this was just 0.1% of my savings, which was realistic. How much did I lose in 5 years? I lost $2 grand doing nothing with my money. I could have doubled my money, but instead I lost $2 grand. Does that make sense to you? When we compare the results from only 5 years ago with my 30 grand, we can see two vastly different outcomes. One kept my money the same, actually lost me a little money. And the other scenario, I doubled it, doing nothing fancy, but putting it in an S&P 500 fund. One simple decision, that was it. Now imagine if you made this mistake for over 30 years. This was a 5-year mistake. Imagine 30 years. I encourage you to practice doing those calculations yourself because it can be very costly not to invest your money you don't need if you're not intentional with it. So be intentional with your cash. How much cash do you really need? How much do you actually need saved? How is it best serving you? Because inflation and the opportunity cost of not investing your money, not even specifically in stocks, but anything you think that will multiply your money, is too big. It can be a large financial mistake for your future because you can retire utilizing one ETF, which I outlined in this video right here. Peace.